So you are welcome to the manufacturing part 2, where we look at some practical examples. So we have this example here. We have the raw material for January 2017 and for December 2017. And we have the manufacturing direct wages, royalties, indirect wages, rents, excluding that of the administrative block and the distribution block, depreciation of plant in the factory, and general expense. So how do you arrange this thing for manufacturing account? So we don't have a name. So if we had a name, we would put X Limited. We would put it there. But we are doing the manufacturing side. So it will be manufacturing account for the year ended. We are looking at 31st December 2017, right? Underline nicely. All right. Then you bring your CD sign. All right. So what do we say we start with? We start with direct materials, right? So what do? We start with opening stock of direct materials. So the opening inventory. How much do we have? We have 5,000. After that, what do? You add any purchases, right? Raw materials. Is there any purchases of raw materials? See it here, 80,000. Is there any carriages in what return outwards of raw material, any drawings of raw material? We seem not to have that. All right, so 85,000 is our raw materials available for use or available to use or available for production, whichever way you want to call it. Then what do? We less closing stock of raw materials. All right, so you don't need to really write the less and all those things. So just write closing stock or closing inventory, but know that it is for the raw material. Do we have it? Yes, here you are, 7,000. All right. So when we take it out, what do we have? What do we have? 78,000, right? So that gives us that of the material. After material, where do we go to? We go to labor, right? The direct labor. And per the examples we had under direct labor, which one can we use? We have manufacturing wages. Manufacturing wages. Is there any other? Since we only have one, that's 210, right? You can bring it here straight, 210, because that's the total of it. Don't write it here and underline and come and write it here. No. So next is direct expenses. We have royalties, right? Is that the only one? I guess so. Royalty is 1,005. Can also add it straight here. So when we add everything together, what is our prime cost? Our prime cost, therefore, is 289,500. That's our prime cost. Then we bring in our overheads, factory overheads, right? So the overheads, some of them can be factory, some of them can be not be factory. So that is where you will be doing the apportionment, okay? As for the direct part, is allocation, purely allocation. So what do we have for the overhead? We have, let's look at it. We have indirect wages. It's there. That's for the labor, right? And how much is that? 90,000. We have rent of factory, excluding that of the selling and administrative block. So that is it. So what if it includes it? Then they will be giving you the basis of apportionment. All right. That's 4,400. That's what we have. Then what do we have? General indirect expenses is there. That's for the indirect expenses. So general indirect expenses, that is 3,100. But there's depreciation of factory, plant and machinery in the factory. You remember what I told you? So if it's for plant and machinery, that one is for the factory. That one will be indirect. But the depreciation of the administrative block is in the trading aspect. So please remember this. So depreciation of factory building is an overhead. So in the part one, go and write that thing there. I explained to you there. Go and write it. If I still have this thing, if you go to the part one, I think I described it to you that, yeah, depreciation, that is it. But if it is standing on its own, I told you that the factory building is straight. It's actually here, part of your overheads. Make sure you understand that. Yeah. So depreciation of factory building. Because it's the factory. But if depreciation is standing on its own, you don't know whether it's for the factory or it's for the administration. So you will be given some basis of apportionment, and that is what I explained to you. All right, so take note of that. But this one is purely for the factory, and so it is here 4,000. All right, so I think that is all for the expense. So if we add all our total overheads together, how much is that? That is looking like 101,500. So what is the total cost that we are taking? You finish producing the thing, that looks like 391,000. So this is production cost. All right, to the trading. If there were work in progress, you add opening work in progress and less closing work in progress. All right, so that is that. So I think this one will do. Let's look at the second illustration. Second illustration. So how will we start this? It's easy, right? The same procedure. Opening stock of raw materials. So this one, we still don't have a name, but let's do the arrangement. So we know that we are doing manufacturing trading account for 2017, just as we did, all right? But you will start with direct material, right? You have your TD sign, all right? So opening stock of raw material. How much do you have? 8,000, right? What do you remember? What do we add? Purchases of raw materials. Good, you are getting there. So you can be putting RM there to represent raw material. What is the purchases for raw material? Let's look into it. Okay, there you are. 87. Is there any carriages of that raw? Oh, good. So, is there any return outwards to of raw materials? If you see those, you subtract, but I guess we don't have. All right, so this one will give us our total materials available for use, and that is 97,000, right? So raw materials available for use. Closing inventory of raw materials. How much is that? Closing inventory, this is it, as the end of the period. So you have 10,500. So what do we have? We have 86,500, and that is our direct material. Then remember, after this, we are looking at direct labor, right? Examples are the wages of the factory people. I mean, those who are in charge with the factory. All right. So the wages, I think, yeah, it's supposed to be like this. It gave us direct and indirect. So we have direct wages. When wages is standing on its own, remember I told you that. So that's the only thing we have, and that is 39,600, right? Good. What about expenses? Direct expenses. So for direct expenses, where do we get some? It's here, right? 1,004. So we have 1,004. So after adding everything, what is our prime cost? I think this one we didn't know to underline it because it's straight. So what is our prime cost? We add everything together, we are getting like 127,500. That is prime. What do we need to do? Factory overheads, right? Add production or factory overheads. What are the indirects in the question? You remember? If you don't remember anything at all, we had indirect wages, right? How much was that? Indirect wages, 25,500. Any other indirect or any other factory costs? So we have had this. What do you think this one is for? Fuel and power is for production, right? It's not for finished goods. All right. So that would be 9,900, right? Apart from that, we saw direct expenses. We are using that. Lubricants. These are all examples of indirect expenses. Lubricants is how much? 3,000, right? Okay. What do we have again? Rent for factory, right? So because it is for the factory, it's indirect to the factory. And that is how much? 7,200. Depreciation of, I think we've talked about this, right? Is for the factory. How much is that? 4,200. Internal transport expenses. It is internal. But please make sure you understand external is, we'll go to the trading aspect, the P&L part. Because this is internal. It's like when they are producing, somebody will drive the thing to the manufacturing place, that small, big trucks that they have. All right. How much is that? 1,008. What else? We have insurance of factory building. Okay. This is factory building. Insurance. But if it is not the factory building, it will go to the trading part, all right, your normal expenses. And how much is the insurance? 1,005. What about general expense? General expense will go to the trading part, but this is called general factory what? Expense. So now you are getting the idea that so far as the thing is factory, it is coming here, all right? So we have 3,300. Now, if we put all these things together, we have 56,400. So this is the summation of our overheads. So production cost therefore will be this plus this, and that is 183,900. So that is that. So this should have been what we take to the production cost, but there is work in progress. So WIP at start or carry down, all right, or opening WIP. What is the opening WIP? 3,500. What is the WIP at end? So if we put this thing together, we have 187,400. Then I will take away WIP at end of the period or carry down. That is 4,200. And so the production cost to trading counts becomes what? 183,200. So ladies and gentlemen, this is it. All right, that is that. So the next thing we are supposed to do is to take your tutorial set question and deal with it. All right. All right, so let's look at the tutorial set question 1, and we will be preparing a manufacturing account. So the name of the company is Okuku Seku Limited. So when you finish writing the Okuku Seku, go and look at the requirements. What are you supposed to do? You are supposed to prepare manufacturing trading income statements, all right? So for the period. So this is what you do. You write exactly that. Manufacturing account all right. So you can do the manufacturing account side, but you can also decide to write it to manufacturing and income statement. All right, for the year ended. But for the sake of what we are doing, we will do the manufacturing account part. So which year are we looking at? 31st December 2021. All right. So you can write manufacturing income. All right, you can write it like that. Okay, so like that will mean that you are putting everything together to actually do what you are doing. So you can call it manufacturing so manufacturing comma income. So not manufacturing account, but manufacturing comma income statement account. All right. So what do I mean? I'm saying this manufacturing comma like this income statement account for the year ended. Then you put the date 31st December. All right. So you do that and underline. All right. So that is that. So if you are going by this, so you know what you put in your currency sign, right? sir, which one should I use now? Use this one. Let's go. If you do this one, when you get to the other side, you will write the name again. The trading, you write the income statement part. All right. Okay, so we know we start with direct material. Okay, so opening stock or opening inventory. Look well. So after doing this thing, you should really read the question. All right, so look at the things that are here. So it means you will be preparing a balance sheet. All right, so as for balance sheet, you know how to prepare balance sheet. So basically that is that. So look at it, office at cost, factory asset at cost, raw material, indirect material. So this is opening raw material. We catch you. So 6,000, you have it. Is there any purchases? So read it first, all right. Direct. So as you are doing, when you encounter them, purchases of raw material, that is 25,000. All right. Purchases of indirect material too is there. So once I have used this, so just for the sake of teaching, I have used this one. I have used this one. But when you are doing it, take it by the side. You have indirect here, you have direct here, factory here, bad debt, sales, receivable, bank, dividend. Okay. So you have it here. You have finished goods. You have payables. All right. You have office expense, commission received. You have motor vehicle loan. Additional information says closing stock of raw material is here, both the here and this one. Then we have work in progress and finished goods, all written. Depreciation is as follows. Factory asset is 10%, office asset is 5%, motor vehicle is this. Note, motor vehicle is equally used in the factory and in the office. So basis of apportionment. So it means that depreciation, we need to split it into two. Rent is also apportioned 70% for the factory and 30%. So that is that. So we'll be preparing the financial position as well. So is there carriages? Did you see carriages of raw materials? Yeah. So carriage. So you have to be vigilant. Okay. Is there return outwards of raw materials? So when you look through, did you see anything like return outwards of raw material? Not really. So this one we total. So we have 6,000 plus 25,000 plus 1,002. That gives me 32,200. That is raw material available to use, right? So I less closing stock, closing inventory of raw material. Where can I find it? You saw it down there, right? So raw material is 8. Don't forget there are 3 zeros here. And that is something most of you also made a mistake in the exam. Don't write this 8 million because there are 3 zeros at the top. Be very, very careful. And it's 8,000. That gives me 24. As for my material side, 24,200. Good. That's what we have. What about direct labor? You know what we said, right? So direct labor. So wages is there standing on its own. We have direct wages. How much is that? 10,000. That's the only thing here. What about direct expense? So we have used this one. there is also direct expenses. This one is indirect factory wages. All right, so direct expenses too is here. How much is that? 4,000. So this is like 34, making it 38,200, right? So that is that. That is that. All right, so that gives us our prime cost. So what about the factory overhead? What about the factory overhead? So the factory overheads, we know rent expense is here, and they told us that the rent expense, we are to apportion it how? The factory is taking how much of the rent? 70. So we will do 70%. I told you that that's how it will always be. 70% of the rent expense of 10,000. That's 7,000. So it means 3,000 will go to the office. So rent expense, that check. This an asset, this an asset, it's work in progress, work in progress. General factory expense, indirect. So how much is that general factory expense? 15,000. Good. General factory expenses, 15,000. Used. Indirect factory wages. It's factory, right? How much is that? 16,500. There you have it. Indirect material purchase. You remember, factory overhead is for indirect material, indirect. So this one even should have been the first, but it doesn't matter. It's 12,000. Bad debt to go to the other side. Receivable is all these ones. This is for finished goods. Office expense, commission received. So they told us that for depreciation to factory assets is 10%. So you know that as for depreciation, the part for the factory is not a portion. So the factory is 10%. So we do 10%. What is the value of the factory asset? Factory asset is 40,000. So 10% will give us 4,000, right? So we've done that. But not only that, they told us that the depreciation of the motor vehicle is to be split equally. So motor vehicle, what is the depreciation? Is 5%, right? Factory asset, motor vehicle is 10%, sorry. And how much is the motor vehicle? So motor vehicle, where are you? Here you are. It's 35,000. And it's supposed to be split equally. So meaning 50% will come to the factory. So we have 3,500 divided by 2, right? So that gives me 1,750. Is there anything we've not done? I think we are good, right? We've done this, we've done this, we've done this for this part. All right. So all expenses has been catered for. Okay. So what do we have? 7,000 plus 15,000. 15,000 plus 16,500 plus 12,000, right? Plus 4,000 plus 1,750. That gives me 56,250. All right. And one thing is also to check your computation also very well, right? So that you don't make mistake also. So this 56, 250, I'm adding it to my prime, which is 38, 200. That gives me 94, 450. So this should have been what I am taking to my trading, but there is what do we call it, work in progress, right? So we will have to bring in the work in progress. So work in progress at start, WIP brought down as at the beginning. This is it. So I have used the indirect material in the work in progress at the beginning. That is 2,500. So if I add now, it's 96,950. So WIP at end, carry down. Where can I find it? In the footnotes, right? So this one too is being used. Did we use the indirect closing stock of indirect material? Did we use that? But I'm seeing in that, wow, we did not bring in the closing stock of uh, indirect material. So it means that we need to check it. So the indirect material too was here. Wow, 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 wow. So it means I need to reverse this part, right? So if you see this, you also have to check. Is there purchases of indirect raw material? Oh, okay. So that's the only part that I didn't bring. So this is what you should do. This is the best thing for you. So let's do it like this. Let me do it like this for you. I could just subtract it, but let me do it the way will make sense to you. So start like this. So indirect material. So we start with the indirect material. We have opening stock. So we get to factory overheads. We start with opening stock under the indirect material. So opening stock, indirect material, where are you? Opening stock of indirect material. Okay, 7,000. Add purchases of indirect raw material, 12,000. The less closing stock of indirect is here. So you do the same thing as you did at the top, all right? So that is the indirect. That's the that's the part. So that gives like 14,000, right? Yeah. So you come to the indirect labor. The indirect labor, we were given straight away indirect labor. That is the indirect factory wages, 16,500. All right, we had that. Then we have the indirect expenses. That is the one that is plenty, right? So where are you? Indirect expenses. General, there was a general, general factory expenses. That's how much? 15,000. Yeah, so the rest can now come in, right? I think even here there is an error that I've made here. I remember when we were doing it, we had carriages, but the carriages do we have for indirect material? No, so it was just raw material. So that's not. So there wasn't carriages. So what we have here, we will bring in the other ones. So the rent was what 70% of 10,000. That's 7,000. Good. What else did we do? We have the depreciation, right? Depreciation, factory one was how much? 10%. So you to be careful, it can happen to you. So factory asset is 10%, 40,000. So yes, 4,000. Office asset will go to the other one, but we had also motor vehicle. This factory assets. But we also have for motor vehicle, which is also 10% of 35,000. But we were supposed to do half. All right. And that was 1750, right? We don't subtract, we are doing cost. So bear in mind that part too. All right. What else haven't we done? So the depreciation is done. What else did we delete that we've not brought back again? So the wages is captured. Everything is captured, right? So we've done the rent, we've done the motor vehicle 50, we've done the factory asset, we've captured this one, two now. All right. So this one is a loan balance sheet. Commission received is income. Office expenses is office expenses. Carriage invoice, this has been done. Finished goods, we will look at a dividend. This dividend is at the debit side, so it means we paid the dividend, we did not receive. So we have bank, we have receivables, we have this, we have that tackled indirect factory. 16,500 has been there. Direct expenses, we've captured it. Purchases, we've captured it. This one, we've captured. Direct wages, captured. General factory expense, captured. Work in progress, yet to. All right, I think we are good to go now. All right, so now let's do the total again. So we have 14,000. Hold on. 14,000 plus 16,500 plus 15,000 plus 7,000 plus 4,000 plus 1750. All right, it's 58,250. So it means that the other one that we had, what was that? The other one, was it 56 or something? 58,250. I think it was 56. And what this thing has done is that it when this one was not captured, there was an increment, right? Kind of. Is there something we've missed again? Because if that one was 56,250 and we didn't subtract a 5,000, Should be like 5150. So it means that probably something is there that is not captured again, right? So let me go over it before I have to come back again. So the 12,000 is there, 4,000. That's interesting. Or that one, I didn't punch it well. All right, so let me look at it again. So opening stock of raw material, indirect, where is it? Opening of indirect, where are you? 7,000. Then I'm guessing that one too, I didn't record something, perhaps. Then factory, this one is there. We've done this one. Purchases of indirect, yeah, it's here. All right. So if this one reduces this to 2,000, we have 14,000. Direct expenses there. 16,500 is there. Yeah, then it means what happened then? So you to be very, very, very careful. Anything can happen to you. All right. All right. So this is what we have. So I'm repunching it again. Plus 16,500 plus 15,000 plus 7,000 plus 4,000 plus 1,750. Yeah, so it's 58. So what do we have here? We adding it to 38,200. That gives me 96,450. All right. So if I add my WIP brought down, where are you? I think we had done it already. This is the 2,500. This is 950, 98. But if I less the closing WIP, the closing WIP is 4,500. And if I take 4,500 out of this, that's like 94,450, right? That will be the production cost. So this one was WIP carried down, right? And this is production cost to transfer. So now let's come to the trading aspect. So if you did the heading like the first one, then it means you have to do the trading account or the income statement. Income statement for the year ended 31st December 2021. All right. So you continue. Okay. So here you know what we start with, like sales. Then less returning was how much is our sales? Sales is here. Sales is here, 160,000. Is there any returning words? No, not seeing any. So cost of sales. So you start with what? Opening stock of finished goods. So opening inventory. Now we are in the finished part. Okay, so where is it? Opening stock of finished goods. This is it, 8,000. Then you bring in the production cost that you have done. So That's the danger. You get it wrong. This is it. So we have 94, 450. Were they buying from external, so purchases of finished goods? We don't have anything like that, right? If they were buying, we will bring it. So this becomes our cost of goods available for sale. So let me add the 8,000. That's a 102,450. So cost of goods available for sale. With less closing stock of finished goods. And where do we find that one? Footnote, right? So it means everything here has now been captured. So we have 12,000. Yeah. So minus 12,000. That's 90,450. All right. So this is where when you are doing and there are carriages of the finished goods to you will be bringing everything. Is that okay? So so if I deduct from 160,000, that gives me 69,550. So that's your gross profit. Add other income. So the other income, you saw something like commission received, right? How much is the commission received? This is it, 2,200. All right, so that one too is captured. Okay, any other income? Guess not. So you now have your net here, which is a 71,750, right? So you less your expenses. The expenses, this is how you should approach it. Go to the footnote and address those ones that are for factory, the office. You remember we did, so here we have depreciation, office assets, which is 5% multiplied by what's the office assets? 30,000. And that will be like 1,005, right? Then what else is there? You had the motor vehicle too, that was 50-50. So the motor vehicle, I think you can see it from here. You did 50% at the top here. So the same thing, 1,750. So it was 10% of 35,000, which is 3,500, and half of that, which is 1,750. All right. So that is that. So you have done this part too. All right. You've done this one. You've done this one. Then remember, they said the rent. So the rent, the 30% now comes in. How much was the rent? Was it 10,000 before? Yeah, 10,000. So the 3,000 comes in. All right. Then you have bad debt. So you now come back and look through it. So it means as far as the P&L is concerned, you have used these things already. All right. So now you have bad debt also to deal with. Bad debt is 1,005. Remember, the things in the trial balance are treated once, but footnotes are treated what? Twice. Remember that. Right? We have dividend, and the way the dividend is positioned, since it's not on the credit side, it means it's an expense. All right. And how much is that? 3,500. So take note of that. If it was this side, it's an income, but for it to be at the debit side, it is an expense. Then we have office expense. 12,000. We have depreciated the motor vehicle, so then the list is empty. So total expense 1,005 plus 1,750 plus 3,000 plus 1,005 again, budget plus 3,500 plus 12,000. That is 23,250. What's my net profit? Net profit minus 71,750. That's 48,500. So that's my net profit. So let's try the balance sheet to see what we have done. So Okuku Seku Limited, statement of financial position. As at 31st December 2021, right? So you set up your cost, accumulative, your net book value, right? Remember, we have CD signs with 00, right? So we have the assets, the NCA, the non-current assets. We have 3 of them. One is factory assets. What is the cost? Factory is 40,000. Then we have office assets with cost of 30,000. Then we have the motor vehicle, which is 35,000. What are the depreciations so far? We know that this one is 3,500, which we splitted. And what was the office? Factory asset is also 4,000. We did that. Then this one was 5%. 5% is 1,005, right? So that is what we did. I think office asset was just here. 1,005. Yeah. So what is our net book value? Obviously, this is 36,000. Then if you pick the 30,000 and you take away 1,005, that gives you 28,500. Then 35,000 minus 3,500. That's 31,500. So that is that. This is 500. Let me write it well. So 28,500 plus 31,500 plus 36,000. That gives 96,000. All right. This is 65 as 105. All right. This one is 5,500. That's like 9,000. Eh? Is that it? Let me check it well. So 40 plus 55 gave 105. 4,000. So this and this is 5,000. So this is 9,000. Right? So if you confirm, it's correct. Underline this and leave this one. Then you come to current assets. Current asset, we have inventory, right? And what inventory are we looking at here? So we have inventory, the closing inventories. So here you will list them. We have raw materials, which is 8,000. We have WIP, the indirect one too, indirect material, which is remember, footnotes are treated twice. And we have the WIP, which is what do you call it? 4,500. Then we have finished goods. Finished goods is 12,000. So footnotes are treated twice. You treated these things in the manufacturings and stuff. You are now bringing them in here. So how much do we have? 8,000 plus 5,000 plus 4,500 plus 12,000. That's 29,500. After inventory, trade receivables. This is where if there were any advance payment, you bring 7,000 trade receivables. Bank is there. Bank is what? 20,000. That's it, right? So let's total everything plus 7,000 plus 20,000. Okay, have we done twice? Yeah, we've done twice treatment for all these things. All right, factory expense was just apportionment. It's not treating it twice matter. It's just apportionment. All right, so take note of that. So this is a 56,500, right? That's the current asset. You less what? Current liabilities. Remember, this is something we did in first semester. Current liabilities, we have payables, right? And this is where if there are any accruals to, you know where you are bringing it. This is 5,000. All right. So now we less it. So it was a less transaction. We have 51,500. So that 51,500, if I now add it, oh, I think I've shifted it too much. If I now add it to this to get my net asset, 51,500 plus 96,000. That is 147,500. All right, that's that. How am I financing this? Financed by what is my stated capital? $48,000. Then I have income surplus. That's like retained earnings, okay? So income surplus is 12,000. That total is 60,000. Then my net profits that I had from my trading. How much did we get? 48,500, right? Okay, so that is it. All right. So when I total, I have 60,000 plus 48,500. That gives me 50. No, that is more than that. It's actually 108,500. So then I come to non-current liabilities. Non-current liabilities. I have loan. So the loan is 39,000. So if I add 39,000, yeah, it balances 147,500. All right, so ladies and gentlemen, this is it. All right, so basically that is that. I do these things with you so that if I make a mistake, you all rectify, just as when you're also doing, you make a mistake, you rectify. All right, so that is that. So thank you so much. In the part 3 of the video, we are going to look at how we do transfer pricing, transfer at market value. All right, so that's the last part of what do you call it, manufacturing. So and I think we will use this question for that. The same question we have done, the same question, but we will be doing unrealized profit. So that is it. I'll explain to you how it is done. Then we will come and fix it into what we have done so far here. All right. So watch out for part 3 of the video where we deal with provision for unrealized profit and how it will come up inside our financial statement. But for now, this is it. All right. Bye-bye.